Good morning. This is Larry McMillan with a market update on Monday, July 20th before the market opens. So we're still in this trading range, a fairly narrow trading range. S&P has bumped up against the 32-35 area several times, probably 4 or 5 times now, and then once before when it formed that island reversal. But it hasn't been able to get through here. I would suspect that we will get through and it will probably accelerate the market to the upside for a while. But continued failures here will give the bears some hope. On the downside, we a couple of weeks ago bottomed out in the 3115 or higher areas a few times. So a break below 3100, say, would be negative, would change the entire conversation around. We have our equity only put call ratios are plunging to new lows, meaning people are buying calls madly again. This was the case about a month ago. It kind of backed off a little, but now has come on very strongly again. So the standard put call ratio, which just measures volume of stock option trading, is at lows last seen more than 16 years ago. The weighted ratio is also very low, although it's just about back to where it was in February. Still a dangerous point. So these are overbought, but they're not on sell signals yet, and they won't be until they roll over and begin to rise. Market breadth has been decent. I mean, I wouldn't say it's been great, but it's been good enough to put our breadth oscillators onto modest buy signals. The same sort of thing goes for new highs versus new lows. New highs continue to dominate. In fact, there was only one new low on the New York Stock Exchange on Friday. But it's not exactly like they're exploding to the upside either here. But again, that's still a bullish indicator. on on Friday, VIX fell pretty sharply and now closed below its 200-day moving average. So that's a potential very positive thing. We also have another positive on the VIX chart in that it formed a spike peak buy signal about a week ago, on the 14th actually. And so we're looking at some positive nature here from VIX. The one potential problem still is that the 20-day moving average of VIX is still higher than the 200-day. But if that crosses below, that should be an all clear sign from volatility, at least for a while. And we haven't had that since prior to February when it went negative and it stayed negative basically the whole time. That's good news. The bad news is if you enjoy volatility and the way it moves markets, that will be going away if the index continues to decline below its 200-day moving average. So the term structure of VIX futures is also modestly bullish. The problem is that October is elevated amongst or higher than all the other VIX futures because of the election. And so it's kind of distorting the term structure right now. And therefore, I can't say it's totally bullish, but it's modestly bullish. So overall, all of our indicators are basically positive. The S&P chart is holding above support, and the other indicators are not on sell signals. I mean, we're very overbought in terms of put call ratio, but all in all, it's still a positive picture. But the bulls need to break out over 32-35 here to confirm pretty much what everything else is saying. So thanks for listening. Be sure to visit our website, optionstrategist.com. We have a number of great deals going there, and our newsletters continue to post excellent recommendations.